Good afternoon, everyone. Thanks again for joining us for today's webinar, Private Health Insurance Exchanges, a Viable Alternative. I want to let you all know that we are recording this webinar so that we can post it on our site for future use. You all are muted, but if you have any comments or questions, please feel free to type them to us in the chat box, and we would be happy to respond. In addition, if you are having any difficulty hearing us or something happens with the technology, please try to let us know through the chat box, and we'll do what we can to remedy that. So I'll start off by introducing myself. My name is Carrie Nixon. I am the President of Accountable Care Law and Policy and the CEO of Nixon Law Group. I have spent the past 13 years or so practicing healthcare law. And I founded Accountable Care Law and Policy a couple of years ago with Carson Porter, who I'll turn it over to introduce himself right now.
Thank you, Carrie. My name is Carson Porter. I've also been a healthcare lawyer for an extended period of time. And like many of you on this call, I've been on the other side of the table as well. In my experience, I've also served as the CEO of 3 different healthcare companies, one with 2,500 employees, one with 1,200 employees, and one with only 5 employees. So I've been all over the map when it comes to healthcare experiences, both as a lawyer and as an executive running healthcare companies. And we all know that we're entering a new era in American healthcare delivery. This cartoon that's coming up here in just a moment, I think you might find kind of interesting. We all live operate in the healthcare space where everything goes by an acronym of some kind. One of my friends once said to me, "Have you heard about ATI?" And I said, "No, what's ATI?" And he said, "Any 3 initials." And then sometimes I think that's pretty much true. Well, in this cartoon, you see a man drowning in acronyms and buzzwords, everything from employer contribution to network to employer-based health insurance, evidence-based medicine, and he doesn't know which way to go. My opinion is, out of chaos comes opportunity, and we certainly are in a period of chaos, as witnessed very high way by the recent implementation of the federally funded exchanges. What we're going to talk about today is a different type of exchange, a private health insurance exchange. We now are in a world with different types of exchanges. There's 3 different types of government ones I'm sure you know about. The one that got most of the publicity is the FFE, Federally Funded Exchange, which went off with a dud on October 1st, although it seems like maybe they've got it rounded into form. Let's hope so. That exchange, of course, is available to people who are Medicare beneficiaries and Medicaid beneficiaries and people of lower income. 14 of the states chose to operate their own exchanges, my old home state of Kentucky being one, which has gotten a lot of kudos for the way they launched theirs with very little problem and very little limitation and a lot of success. So it's all across the board when we come to public exchanges. But unbeknownst and kind of flying below the radar is a whole audience of private health insurance exchanges. Carrie and I are going to refer to them today as PHIX, otherwise known as PHIX. So when we talk about PHIX, we're talking about private exchanges, not public exchanges. Let me take just a moment and get us to a point where we all are on the same path. What's the lay of the land in this arena? And then I'm going to turn it over to Carrie to drill down a little bit. What we have seen for the last several decades is health care generally provided by one's employer. And what we know about that is of the benefit dollar supplied by each employer in the country, roughly 90 cents out of that dollar, or 90% of it, goes to health care benefits. There's some odds and ends of other things, but mostly it's all built around health care benefits. We're beginning to see a shift in how those health care benefits are delivered to the employees. And this is where PHIXs come in play. For example, one that launched October 1st quite successfully was an IPO of BenefitFocus. This PHIX is one that's been generated out of chaos comes opportunity. And they're offering their services to people who are shifting from fee-for-service to patient-centered care. Now, what does that mean? We've lived forever in fee-for-service. Now we're talking about fee-for-value. And that changes the way we deliver care, and that changes the way we pay for care. What we're seeing is employers moving from defined benefit plans to defined contribution plans. And at the very fundamental level, that merely means rather than saying to the employee, at such and such time out in the future, you will receive the following benefits, they're saying we are going to take a certain amount of money each year and pay it into a fund, and we're going to deliver whatever benefits that fund generates. And in fact, as they move into the PHIX arena, those employers are saying to their employees, you pick the insurance that you want. And here's a web-based tool called a Healthcare Information Exchange run by a private organization to which we have subscribed. and we've given our money to that organization, and you can pick and spend however much you want that's allocated to you. If you want to buy some kind of catastrophic insurance like cancer coverage that's going to cost more, then you have to pay for that on your own. So that's where we are now with defined contribution, and frankly, we believe that's where everything is going. And that's where PHICs has come in. So let me turn it back to Carrie to help us better understand what a PHIC really is. Carrie?
Thanks, Carson. And before I do that, I understand that we've got at least one person that's having some difficulty hearing us. If anyone else is having difficulty hearing us, please let us know in the chat box. So let's turn to the definition of a PHIC. What is a private health insurance exchange? So a private health insurance exchange basically provides a competitive marketplace for individuals and employers to compare private health insurance options on the basis of price, quality, and other factors. Now, that's a very basic definition, but the truth of the matter is that a private health exchange can take many forms and serve several markets. The private health insurance exchange is not nearly as regulated as the public exchanges, and so there's really no one standard model for how a private exchange has to work. Here you've got a lot of opportunity for creative and innovative approaches. In fact, private exchanges are not necessarily limited to just health insurance. A private exchange can be a marketplace for other types of insurance as well, and we'll talk about some of those, some other products that might be included on private exchanges going forward.
That would also include non-insurance benefits, wouldn't it?
That's right, it sure does. So, we might be better off sometimes referring to these things as private benefit exchanges or just private insurance exchanges. But for our purposes, we'll stick with PHICs for right now. But let's talk about some of those other products. Carson, you said that they could add, that exchanges could include some ancillary insurance products in addition to health insurance. On November 7th, just the beginning of last month, BB&T Insurance Holdings, which is the 6th largest broker in the country, announced 2 Care Plus benefit exchanges. These exchanges allow employees to select their own dental, health, life insurance, vision insurance, and disability insurance.
I'm sorry to interrupt, but I'm reminded that I saw one article where somebody was talking about adding pet insurance.
Absolutely.
So this can be just about anything.
Absolutely. So, again, underscoring that there's really no one standard approach. BB&T has these 2 exchanges that it set up. One of the exchanges is very much standardized, and it's targeted towards employers that are looking specifically for low administrative costs. They really want the exchange to take care of the administrative functions itself. The other model that BB&T has put forward is customizable, based on what a particular employer wants to offer to its employees. So it's a little more specific to that employer's market. Let's take a look now at some of the market opportunities that are available, what the market opportunities look like for private health insurance exchanges at this point. I want to run through a couple of recent surveys for you. This Mercer survey in May of 2013, they surveyed 900 employers, and 35% of those said that they would consider offering a private benefits exchange within the next 2 years. 57% of those said they would offer it within the next 5 years. Let's take a look at another one. The National Business Group on Health, March 2013. 30% of large employers are considering moving employees to private exchanges by the year 2015. Also a pretty impressive number. Finally, an Accenture report in May 2013 predicts that by 2017, 18% of the American public will purchase insurance through exchanges. That is a pretty telling number.
That's 66 million people, roughly.
Yep, it's an enormous number. So let's dig into these market opportunities a little bit further. First, let's talk about large and mid-sized employers. Those are really the most obvious candidates for private health insurance exchanges, and it's where we're starting to see a lot of action now. This fall with the IPO of BenefitFocus, and then in the month of November alone, we saw several private health insurance exchanges announced their launches. Now, it's interesting because there are private exchanges that have been in existence for several years, but I think it was really the launch of the public exchanges on October 1st, and maybe we should call it the failure to launch, that really brought the notion of private exchanges to the forefront, and suddenly we're seeing a lot more interest. Carson and I, a couple of weeks ago, gave a presentation to about 50 investors nationwide, members of the private equity sector and the venture capital sector, and all of them, signed up to listen to us talk about the market opportunities for private health insurance exchanges. There's no way you would have seen that level of interest, a couple of years ago. So things are really coming to the forefront. So with large and middle-sized employers, the notion of private health insurance exchanges creates a fairly interesting dynamic for insurers themselves, because currently insurance companies basically have their large employer clients locked up. An employer says, okay, I'm going to go with Blue Cross, and that's the deal. The next year, comes up for renewal, and frankly, it's usually easier to just stay with the same payer than to switch payers unless they're going to give you an awfully good deal. Now, if large employers move to private exchanges with multiple plans available on the exchange through multiple insurers, then we're going to see more competition. This could result in better plans at reduced rates. Now, another thing about the large group market is that large group plans are not as constrained by some of the requirements of the Affordable Care Act. So while all health insurance plans are prohibited from denying coverage for pre-existing conditions, and they're all prohibited from imposing lifetime limits, and all of them require that you can be covered by your parents' insurance up to the age of 26, those there are other requirements that the large group plans are not bound by. Large group plans are not required to include the essential health benefits that the individual and small group plans are now required to offer. So this means, for example, that large group plans don't all have to offer maternity coverage. That's an essential health benefit that the individual and small group plans do have to offer. So in terms of employees, a private exchange creates more of an opportunity for individual employees to shop on a private exchange, to select a plan that really meets their individualized needs, rather than sort of the one-size-fits-all approach of a defined benefit model. Let's turn now and look at small employers. As we know, employers that employ under 50 employees are exempt from the Affordable Care Act requirements to offer access to affordable coverage. But private exchanges are still, are becoming more popular among small employers because they are aimed at allowing employers to attract and to retain talent. So on November 5th, for example, United Benefit Advisors announced the launch of BenefitBay. And BenefitBay is an exchange that is targeted specifically to employers with 50 and under employees. It gives a wide choice of carriers for health insurance products and also ancillary products like we discussed previously. But it also, at the same time, gives employees who might be eligible for tax subsidies to go to the public exchanges. There's also a market for single carrier exchanges among small employers, where a small employer might have an exchange where just one insurer offers a variety of plans, and we'll talk about that a little more in a moment. What about the individual market? I think it's safe to say that the public exchanges are going to be more attractive to most individuals because subsidies are not available for products that are bought on the private exchanges. However, there are some private exchanges that are available to individuals, and some may choose to avail themselves of those for other reasons, and we'll talk about that in a moment. One market opportunity that's really interesting to consider is an exchange offered and targeted to a particular affinity group. We've definitely seen this with retirees, where there's a private health insurance exchange that is targeted specifically to retirees and their needs. But you could also have a disease-specific private insurance exchange. You could even have an industry-specific private exchange where the demographics associated with a particular industry may make the risk pool a little more manageable to assess in terms of its risk. That's something that we haven't really seen done very frequently, but it's something that's definitely out there and should be considered. Let's take a moment now and look at some of the emerging models that we have seen. Carson?
The first one is the Regional Business Association Exchange. This came on the scene around 1960, so it's been around for quite a while. It tends to target small employers within a defined geographic area where they pool their resources to provide insurance coverage to people living within those areas. As you can see on the slide here, we have 4 examples, one in Connecticut, one in New York, one in New England, and one in California. All of these have one thing in common. They're in densely populated areas with a large amount of consumers. So the Regional Business Association Exchange contracts with insurers to offer a variety of products to people who are densely populated, where they have an opportunity to penetrate with limited marketing effort a large audience of consumers. The next one is a Regional Insurer Exchange, and I'll toss it back to Carrie to explain that to us.
Sure. There's some debate as to whether or not these regional insurance exchanges are quote-unquote real exchanges, since typically only one carrier is represented in the exchange. But they do offer a choice to consumers or employees, and therefore, there's an argument that they are exchanges. So there are major insurers such as Aetna and Blue Cross that are offering their products on multi-carrier exchanges, but they are also simultaneously developing their own proprietary exchanges that just carries their products. So this allows those payers to partner with providers to develop unique accountable care delivery models that focus on quality care at reduced costs. And I think there, we really could see some new innovative delivery models that come about. We've seen some very interesting partnerships here in Northern Virginia, for example, between Aetna and Inova, a large health system. And they, in fact, have started their own health plan. Let's talk about the national broker exchanges.
Well, the national broker exchanges are interesting. They're not your typical exchange because there's no direct interaction with consumers. This is basically an online clearinghouse for insurance brokers. One example of that is something called Benefit Mall. If you visit Benefit Mall, you'll see a variety of tools and opportunities available there. But they're put there by brokers, not by the employers or other people. They do not directly interact with employees, work only through brokers, and a broker must be a member of the National Brokerage Exchange to gain access to list any of his plans. As I said, Benefit Mall is the largest national broker exchange in the United States. These tend to be attractive to individuals and employers who want to work with brokers. Some people like using a professional service as a broker as opposed to trying to make independent decisions themselves. They may also appeal to large employers who must wait until 2017 to enroll employees in public exchanges. Once again, they want that broker advice. Some people, however, have prejudice against having broker advice. They think they're going to try to steer them towards a product where they're going to make a greater commission than otherwise. So they serve a purpose for people who want to be connected through brokers, but there are other options as well. Carrie, tell us about the national employer exchanges.
Sure. So this is really sort of the true exchange, where you've got a broad variety of insurers and a broad variety of plans nationwide in scope. And thus far, it's really been targeted to large employers. And again, this is where we've seen the most action lately. IBM and Time Warner, for example, have moved all of their retirees to a national employer exchange through Towers Watson. GE is also in the process of making that move. And some are arguing that, that they've done this with great success, and that this success indicates that private exchanges can very well be, successful with active employees as well as retirees. Walgreens, for example, recently went from a self-funded plan to moving all of their employees to a private exchange and fully funded plans. They used Aon, which has signed up at least 18 new large employers recently, including Sears Holding Corporation, Darden Restaurants, Red Lobster, and Olive Garden are part of that chain. All of those have moved to private exchanges for their employees. And so, they're setting some examples and setting some trends that I think we're going to see continuing into the future. Carson, tell us about our last model, the national individual exchanges.
Absolutely. These have been around since the mid-90s. The largest example is eHealth Insurance, and I'm certain we've all seen numerous advertisements on television for eHealth Insurance. It's a web-based product where you can go and fill out a questionnaire, answer some questions, select from a menu of options with a wide variety of insurance products offered. And you kind of build your own package based upon your desires and needs. However, there are no brokers whatsoever involved in the national individual exchanges. They're prohibited from participating. So if you like to work with a broker, this is probably not going to be for you or your employees. But if, on the other hand, you'd like to take the broker out of the equation and work directly with the source, this may be very desirable for you. However, there will be no subsidies available like there are on the public exchanges through the national individual exchanges. There are some legal and regulatory landmines, however, to accomplishing all of this. They're not insurmountable, but we need to discuss them in a little bit of detail. The first one relates to the development around the Affordable Care Act. Carrie, would you please address that?
Sure. Actually, though, before we get to this, can we back up a slide and talk about our critical factors for success? We've touched on a lot of these during our discussion of the market opportunities, but I think it's worth just kind of going through them as a whole.
Well, what's interesting about this, now that we have the backdrop of the trauma of the introduction of the public exchange, user-friendly interface. Clearly, the public exchange did not come with a user-friendly interface, and we now know how important that is. Decision support and recommendation technology. Most of these private exchanges will provide the person going through the exchange, the consumer, with some support about which way to go in making their decisions, and that'll be done with algorithms generated through what's called recommendation technology. The consumer fills out a questionnaire and says that they have diabetes, for example. Well, that will trigger something in the algorithm that eliminates certain policies and focus on other policies. That's called recommendation technology. Competitive marketplace with a lot of products, including supplemental products. Well, that's going to be, the more you have available, probably the more attractive you're going to be to a greater part of the population. So that's when Carrie was talking about earlier, maybe these should be called benefit exchanges, not just insurance exchanges, because we can certainly hang all kinds of benefit devices onto the exchange. The last one that's very, very important in the private area is seamless funding and exchange of data. What do we mean by seamless funding? Well, the exchange has to have the ability to receive payment either directly from the consumer or from the consumer's employer, which will happen mostly with the defined contribution plans. And they have to be able to segregate and account for that funding and spend it in accordance with the wishes of the employee or the consumer. They also need to be able to exchange data in order to continue to improve and develop best practices. These are going to be the critical factors for success. If a given product or a given exchange fails to meet these four key criteria, they're likely going to fall by the wayside in the competitive marketplace. And we certainly have seen how important most of these things are in the implementation of the public exchange that we recently went through. So if you're going to think about with a private health insurance exchange or developing one of your own, and as we said, we spent some time last week presenting to about 50 venture capitalists in the country who are interested in funding these things, then you better be focusing on these four attributes, because I guarantee you the consumer will be.
And then, of course, the last critical factor for success is avoiding legal and regulatory landmines. So we'll talk about those for a moment. I'm actually going to go a little bit out of order here and talk about ACA compliance first. So we mentioned before that all plans have to cover pre-existing conditions. They cannot impose lifetime limits, and they must insure children up to the age, or dependents up to the age of 26 on their parents' plans. So we know that applies to all plans. We also know that individual and small group plans must include essential health benefits in 10 categories, and I'll go through real quickly and just list the 10 categories in case you happen to not know them. It's ambulatory patient services, emergency services, hospitalization, maternity and newborn care, mental health and substance use disorder services, including behavioral health treatment, prescription drugs, rehabilitative and habilitative services and devices, laboratory services, preventive and wellness screening and chronic disease management, and pediatric services. So it's pretty easy to see that those essential health benefits are not necessarily included in all individual and small group plans at this point. But going forward in 2014, they will have to be. Now, the large group plans currently do not have to include the essential health benefits, though it is the case that they may impose penalties for not having some types of coverage. Hospitalization is an example of that. If a large group plan for some reason did not include hospitalization coverage, they're going to face a penalty. But it's not clear that right now there aren't a lot of clear penalties for not including some of the other essential health benefits. The question really is sort of how and when the government is going to start regulating private exchanges. So, for example, insurers are waiting to hear whether CMS is going to allow composite ratings, and that means they can take advantage of they can take the average of all of the risks in a pool and come up with one premium for all employees. Now, some people feel like this absolutely must be allowed in order for a defined contribution model to really work. And in fact, some insurers are saying that they're getting indications from CMS that they will be allowed to do composite ratings. So we're all in we're in a rather uncertain landscape at this point. Carson, why don't you talk a little bit about the HIPAA issues?
Well, we're all familiar with HIPAA and its requirements to maintain patient privacy, and there are a whole body of rules, as most of you are familiar with, as to how you have to do that. There are many vendors out there in the marketplace who provide HIPAA-compliant data collection machines, etc. Be very careful in how you evaluate their capability. They'll make many, many promises, but can they truly deliver? Check their references, check their credentials. Also, make certain that you have professional assistance in developing what's known as a business associate contract or agreement. This is a term of art that's been developed around the HIPAA community and is very important when you're dealing with IT vendors. So make certain that whoever is working with you guarantees HIPAA compliance, and make certain that your staff is well trained so they don't inadvertently violate the rules. The last one I'll just touch on, that's state insurance regulations. The only point there is whenever you're dealing with insurance products, they are regulated not by the federal government but by states. So in almost every case you're going to have to be compliant with whatever the rules and regulations are in your given state where you're operating. Since that varies so much from state to state, we don't have the time or the energy today to drill down into some of those regulations. But be aware that you're developing a product and a delivery system that will be viewed and regulated in some fashion by the state insurance departments.
Carson, there are pros and cons to the whole shift away from a defined benefit to a defined contribution system, and in fact pros and cons to private exchanges as opposed to public exchanges. Let's talk about a few of those. So, for example, in a defined contribution system, employers are better able to manage their health care costs. They're able to know year from year how much are they going to spend on health insurance and what's the rate at which their own fixed contribution may increase over time. They have control over that. And, I think everyone would say that that's a real pro. It gives employers a lot more certainty as to what they're providing in terms of benefits.
Actually, that's a pro for the employers, but it might be a negative for the employees. If the rate of health care costs continues to rise faster than the rate employers choose to increase their contribution amounts, then essentially more of the cost of coverage shifts to the employees. For example, let's just pull a number out of there. Let's say the employer says, I'm going to give $1,000 a year as a defined contribution to each of my employees to spend as they wish on this benefit exchange. So the employee says, great, I got $1,000 to spend. So he goes and he spends his $1,000, and the next year they say, we're going to give him $1,000 again. However, let's say the cost of insurance went up 10%. So now the $1,000 only buys what was then $900. So as you can see, if they don't increase the contribution at the same rate the cost of coverage is increasing, the employee is going to fall behind over an extended period of time. It's because the value of the dollar will not buy the same every year. That's an issue that employees are going to be concerned about, and employers therefore are going to have to deal with it in order to convince the employees that this is a good option for them.
Well, let's look at another pro. You know, with these exchanges, you've got quite a choice of health plans available. And this takes some of the pressure off of employers, right? Because the employers then don't have to decide which plan they're going to offer each year. They're not making the decision for their employees. In fact, they're allowing their employees to choose a health plan that best fits their needs.
And that's a double gain for the employer, because under the current ERISA laws, an employer can be held liable for violating its fiduciary responsibility if it selects in its health insurance program a plan that is the lowest cost but not adequate quality. Now, there haven't been very many cases brought under this provision of ERISA. It's a little-known provision, but nonetheless it's there. And one of the positives for the employers is they get out from under that liability by saying, you, the employee, you make the choice. Now, the downside for the employee, however, is if they make a bad choice, and we're all subject to making mistakes, then they're going to blame the employer. So now the employer's got some employer-employee relationship problems he's got to deal with. So it's always a balance.
So we talked a little bit about the ability of private exchanges to incorporate supplemental insurance products. And frankly, when you're aggregating these products together in one exchange, you are often getting them at a reduced cost. And you're offering your employees a more customized package. So, you know, that certainly seems to be a benefit for employees.
Yeah, but what if the employee has some significant out-of-pocket expenses not covered by insurance? Once again, the employee may be upset, and that will reflect upon the relationship with the employer.
Well, the decision support that's incorporated into private health insurance exchanges is critical as well. So if the decision support technology is built into the private exchanges, it means that employers don't have to allocate very significant resources every year to helping employees choose which coverage is best for them during the open enrollment period. You know, these decision support systems can even be educational for the employees. They provide employees with education about what they need and what might be missing in their current packages, and enables them to make better choices.
Well, that's a possibility, but what if the employee feels like he's been abandoned by his employer who always previously made those choices for him? Some people just don't want the responsibility or want to take the time to try to make those kinds of decisions. But on the other hand, you will have people who will embrace this dramatically, enjoy being able to make personalized decisions, and if it all works out, they'll love their employer. But what happens if it doesn't?
Yeah, that's true, Carson. Some people really do want the personal support from an HR person rather than simply the support of a computer system, which may not be nearly as caring towards them. So that is a pro as well. So let's talk about the legal issues that could be involved. On the pro side, and this is actually, it's more of a tax issue, I think, employers and employees both maintain favorable tax treatment for health insurance coverage. Employer contributions are not taxable to the employee. Employee contributions are also made pre-tax, and employers can deduct contributions for health care coverage as part of a business expense. So that is all very good news that, you know, remains in place with the private exchanges.
Well, I don't want to get too deep into the weeds because I'll put everybody to sleep, but there are some issues that professionals in this area need to be thinking about. Frankly, right now it's unclear whether employers that adopt this defined contribution strategy will actually violate healthcare reform's annual limit restrictions. It's possible that a standalone HRA that funds the purchase of a group or individual market plan could very well violate the annual limit restrictions in the new law. It's also unclear whether employers who adopt a defined contributions plan will meet the employer mandate for affordability and minimum value test. That means, for example, if an employee uses an HRA to purchase a group or individual market plan, it's unclear whether the employer contributions to that HRA will be counted for the affordability test. Now, I don't want to go any further on that because we're already venturing ourselves into the weeds when we start to talk about these types of ERISA concerns. The only point we'd like to get across is there are many, many issues, both business decision issues and legal and regulatory type issues, that need to be considered when one engages in this type of activity.
Let's see if we can open it up to questions from the audience. If anyone has any questions, please feel free to type them into the chat box, and we would be happy to take a shot at answering them. We'll hold on for just a moment and see what we get. Okay, so here's one. Can private health insurance exchanges sell insurance to people who may be eligible for a tax subsidy?
Well, the answer to that, a short answer is yes. But people who enroll in a private health insurance exchange will not have access to federal subsidies. Those are only available through the public exchanges. So they will give up the access by going to a private exchange.
So basically they're not prohibited from purchasing from a private exchange, they just don't get the tax subsidy.
Exactly.
Okay.
Well stated.
Got it. Okay, here's another one. If Obamacare is repealed or defunded, how will that affect the private health insurance exchange market?
Well, I don't think it'll make much impact at all because the private exchange market is not directly affiliated or associated to Obamacare. But PHEXs may be implicated in some other ways. Those who currently qualify for public exchange subsidies may be attracted to private exchanges, so that would bring them more customers. In the absence of, or for example, federally mandated essential benefits provisions, they will go back to bare bones catastrophic plans, which the insurers may like better, but I assure you the insurers, the employees, the consumers will not like so well. But the real heart and soul of that question is an assumption that Obamacare will be repealed, defunded, or otherwise amended. And if we think about that from a civics perspective, it takes 2/3 of the House and 2/3 of the Senate to override a presidential veto. And in the House, the people who are against Obamacare are about 50 seats short, and in the Senate, they're 20 seats short. Highly unlikely that they're going to be able to achieve the momentum to be able to override a presidential veto. So I think Obamacare is here to stay, and the wise people in the community will figure out how to benefit from it, not how to attack it.
I don't believe we have any more questions, so we will move onward. And this is my contact information and Carson's contact information. In case you would like to get a hold of us, we'd certainly be happy to talk with you if you have questions about setting up PHEX. Or other questions that involve any of the Affordable Care Act reforms. And with that, we will say goodbye. This webinar was recorded, and we will post it on our site. So if you missed any portions of it, or if you would like to forward it to someone else that you think might be interested, please go to our website at accountablecarelaw.org, and you will be able to download it. Thank you so much for participating, and have a great afternoon.
Good day.